Bloomberg Audio Studios. Podcasts, radio, news.
Single best idea, maybe in umpteen months. This was the hardest day to pick two moments to speak of. It was absolutely an extraordinary show on economics, finance, investment, and international relations. Thank you, Mick Mulroy of the Lobo Institute, with his public service to the Marines and to the CIA for his perspective on all of our geopolitics and our military people at risk every day worldwide. He was just absolutely phenomenal, and the list goes on and on. I thought Jordan Rochester, representing Mizuho, the great Japanese bank, was just spellbinding on how things have changed. Finally, there's a legitimate inflation in animal spirit within Japan. That's a stunning comment, literally going back 30 years. Michael Darda joined us with Roth Capital Management. We talked to Michael Darda just simply about the path forward.
Over any extended period of time, corporations will adjust. I think they can be flexible. But the question is, what does that mean for the business cycle in risk markets? Because if the adjustment is that we see a pickup in layoffs, which seem to be happening, you could end up with some economic dislocations here in that transition that are associated with a fairly significant equity market correction. Now, to Paul's question, the consumer's held in there. Why? A lot of the consumer spending is driven by high-income households that have been riding high on this huge stock market rally, which is now flickering and flagging in a labor market that has come in and blown expectations off the wall in terms of being, strong and sustainably robust payroll growth. And that could also be under threat now. So yes, the corporations will adjust, but the question is, what does that mean for risk markets in the business cycle in the interim?
Michael Darda of Roth Capital. Frances Donald was with us as well, really back-to-back with the Bank of Montreal and Ian Lingot, and then to Frances Donald with the Royal Bank of Canada, RBC Capital Markets. Late in the conversation, Frances Donald of Montreal and of Her Canada on tariffs and the way Canada helps us each and every day.
Canada provides 60% of oil imports to the United States, 90% of electricity imports, 99% of natural gas, 85% of potash, 98% of canola, 34% of your meat, and let's not forget critical minerals, which is 19% of U.S. imports, 27% of your uranium imports come from Canada. Canada helps to heat the United States, it helps to feed the United States, and this is not 2018 anymore. The U.S. is struggling under an electrical grid and has substantial energy needs that Canada can help to rectify. So I think the focus should be on how much can Canada support U.S. exceptionalism going forward, and what is the upside of actual increased collaboration between the two countries. That's the story that I think will resonate, because President Trump has huge ambition for what the U.S. economy can become, and there is a lot of upside for the U.S. as well. Canada upside equals U.S. upside. We've spent a lot of time thinking that Canada benefits from the United States. The reverse is also true, and we got to push that narrative, not just for Canadians, but for Americans as well.
Bottle it. Frances Donald, RBC Capital Markets. We're out on YouTube. Go out to YouTube Podcasts. This is Single Best Idea.